Hi, Warriors. Who's ready for a productive week as nationalism, the right side of politics, continues and shows its rears its head in Japan. So, how you doing, Mike and Steve, Ingmar, Hugo, hi, Ryan, Blake, AJ, K-Man, Will, and Ingmar? All right, why don't I start off with someone who spent, out of all of us, the most time in Japan, to be K-Man. Good morning,
Oh,
K. How are you, buddy?
yeah, very well, thank you. And hope you too. You had a relaxing weekend.
Thank you very much, bro. Why don't we start off with
Yeah.
in your memory, can you recall a time where uh, nationalism, the right wing, has made such a showing in your lifetime?
You mean for Japan?
Yeah,
Um, well, we have to make maybe the comparison with right wings elsewhere, and then people are comparing it to the AFD in Germany. Is perhaps a tad far sought because it's still Japan, you know. But all in all, Japanese is globally a bit right-leaning. They back in the days they were called the Nazis of Asia. Um, but
well, yeah. So we're talking World War II,
yeah, yeah,
right?
yeah,
Okay, so I'm talking like the modern era since
yeah. The
then.
modern era.
Yeah,
You mean the right wing doing so well, and then the
yeah.
tendency not suffering?
Yeah, like immigration, just like everywhere else, being a big issue.
Mm,
Not liking the U.S. Pushing them around, nationalism
yeah.
showing up there.
Well, even in the modern times, yeah, Abe was quite right-leaning as well,
Okay,
after the big quake. So it shouldn't come as a huge surprise in Japan. Yes, there's this new party, Sanseto, who is trying to lean like very right, and complaining about the too many tourists driving up prices, etc. Japanese first, but it's all
okay.
still to be taken with that little bit of
Grain of salt.
yeah. I mean just a bit, because
Yeah.
when you go to Japan and you're a foreigner, and I've been about what is it, a month ago or a month and a half ago, they are still extremely friendly people. But
Okay.
that is maybe since we speak one or two words of Japanese, so maybe they are always happier about that. But yeah, I think the case what we're seeing here is really the fact that it could have been worse. It could have
Okay.
been worse for the LDP Komeito, but still, I think this is the first day after reaction. The market was positioned for it. People taking off some positions now in waiting for how messy it's really going to go, because having lost their majority in the upper house after having lost it last year in the lower house is still going to have them to get support from at least one third party to push anything through in the diet over there. So I
Okay.
think it's just a first day reaction.
Okay. All right. Well, do you fade that first day reaction, or do you think
I'm
we'll take out 47 first?
well. I've been. I'm still a bit short yen, but I've been reducing, re-adding. But I'm keeping things relatively small right now. But give me 147 around there. I'm probably going to add a bit. But again, as I was saying this morning as well, and in our room, I said I'm still um, not completely out of the fact, should I be in dollar yen or should I be in another cross yen, because the crosses remain relatively big. I mean, euro yen is still above 172, but then you see a little bit of relative weakness in the dollar creeping in right now. Um, but I still think the dollar is more going to be range trading for to start the week than really fall out of bed. But so yeah, I will at around low 147s. I will do something in yen, add to shorts probably, and shorts in the yen, the currency. Yeah.
Yes.
Add to short yen, but really, I'm still debating with myself to know which cross or whether it be pure dollar yen. We will see where the rest of the dollar pairs are when or if and when we will reach that low 147. Um,
Hey, good morning,
yeah.
guys. And K-Man,
Hey,
do you mind if I jump in and ask, do you think a lot of this is just position adjusting? I mean, I
Yes.
think people came in really short yen
Yeah.
over the weekend, expecting us to be at 151
Yeah.
today, right?
Yeah. Absolutely. I think it is, and also Japan is closed today. Yeah? I mean, officially closed today. So we may see Japanese asset managers or Japanese money rather start to move tomorrow, perhaps, after having waited the first reactions. I still think this is position adjustment, and okay, we've got it. We haven't got a weaker yen, so we are going to adjust our positions right now, and then we think again. And also, Blake, we don't know what kind of coalitions that Ishiba may be forced to make in the next coming days. And also one of the LDP heavyweights, Aso, who was finance minister under Abe, he said that he would not support Ishiba anymore if they lost the election. So there's still a lot of the situation is still pretty fluid, I
Yeah.
would say.
So,
So
so
yes, this to me
okay.
is just getting out of hopium and front running positions, and I don't think we're in a reversal at all. Well, not in my book anyway.
so maybe
Dale,
this was
sounds
a,
like Dale sounds like he's being an asshole.
oh yeah, okay, good one.
Don't forget to look at yields. If you're looking at dollar yen at the moment, you need to look at US
Sorry.
10-year yields.
Yes, they're coming off pretty good. They
They're coming
started
off pretty hard.
Friday.
Yeah.
Well, yeah, all the dollars are weaker and following a bit of yield, so there's likely a bit of that. But okay, I mean that's just a
But
part of the
yeah, I would think that they're going to go for the stops here, some type of ABC, take this out, maybe go 650 and then make a stand. But
mm.
you have to think there's at least one stop under 4688.
That's the Powell spike. I mean,
Yeah,
are you really banking on that one for stops to be below there? I wouldn't know. I mean, this is not something that I usually. This
think
is just
about.
a one-off spike.
Yeah. Well, I do. I look at
Mm.
a chart and I go,
Oh, it's
where the
possible.
longs have their stops, where the shorts have their stops,
Mm.
and and which one do I think they're going to take out
Yeah.
first? So they usually take them all out, but
It's
it's in
not far.
order.
It's not far from those prior lows from where we
Yeah,
jumped up to the recent highs. So yeah,
right.
it could be a decent area where there should be some stops below. I mean, if we get it, and it seems that we are heading for them at least because we lost another 10-15 pips while we are talking here. It could be that we're going for them, but I'd still see this as a short-term move right now, and then
Yeah.
we will see how the week evolves.
Okay.
I can
I
tell you where
really
some stops are, Dale.
okay.
There's some stops at 146, 147.45 because they're mine and they've just been hit.
Okay, yeah, Ryan. I knew you had something. All right. Let's go to Europe. Ryan, how are you, buddy? Hope you had a good weekend. You and Blake and Kay all talked about the stability in cable last week at this important support level. We're trying to come out of the hole here in cable. You think it has enough in it for 5.5?
Yeah, I think it's possible. We're seeing a bit of a bounce. It looks a bit dead cattish at the moment, though, taking 2-3 days to do 60, 70 pips. Doesn't scream of strength. But I'm not. I don't know if we've seen a turn in the dollar though, because the data still keeps coming out pretty good. We had Michigan on Friday. That was pretty good. Other data pretty good. So we're seeing a bit of that US exceptionalism again, and we're talking about euro and can it go to 120? It's still in the running, but it's still leaking lower slowly. And yeah, so I don't know if this dollar dip is just maybe it's a temporary thing, or if it's the start of something bigger. But yeah, your Dixie there could be looking at precarious at this 97.50-ish.
Yeah, let's say, and analogous to the yen would be this low in the dollar,
Yeah,
which some wave guys say is, not going to be a good sign if they take that out. But, why can't we just correct this advance? It was 250. So pull back 61.8, be 150, be back towards 97-ish, possible, and put in a higher low. So just because it comes off and corrects doesn't necessarily negate that the dollar has bottomed temporarily.
yeah,
So that's the way I'm kind of leaning, or I'll trade it that way anyway, because I don't think we're just going to straight line to new lows. Okay, so Aussie bringing up the rear. Is there hope for Aussie, or is this a pop that we should be selling? It looks like it's a little behind cable. 65.40 looks like an important area, 540, 550, if it gets through there.
yeah. This one looks like it's consolidating a bit at the moment. We've got this range down to 64.40 to that prior low 60s. If you zoom it out a little bit on that chart, you can see that we're still in a decent uptrend, but we're just struggling to get back towards those highs. So it's still in the running, but
Yeah.
The worry I get when you're in a trend like this one's been in an uptrend for the last few months, and it just keeps struggling to break new highs, get up to the highs. You just got to wonder how long before buyers up here really throw in a towel, and then you see a steeper pullback, which sometimes clears it out, and then you go on to make new highs after that.
Okay. Tip of the hat to K-Man, who talked about his bearishness late last week. Maybe some of you guys in the room took advantage of K-Man's call. Nice call. Kay, are you looking for new lows here?
No, not yet. As I said, I mean, I think the start of the week is going to be a range week. So yes, I sold it, but I've already started to take like
Cover.
some slices off, and
Okay.
I'm not looking for fresh lows yet, but well, I mean, 1850 is the magic number. Huh? If you break through 1850s,
Yeah.
it's going to accelerate again. But until that happens, I'd rather see it in a range like most of the dollars right now, really.
Okay. So the metals are taking advantage of
Yeah.
a strong yen, gold popping. I'm considering taking a shot. There's some measured moves up here at 3,400 in
34
gold.
figure 10, yeah.
Yeah.
34 figure 10. There is stuff going on there.
Yeah, I'm going to attempt it there. You think silver will make a new high
Bait.
if gold rallies another $25?
Well, yeah, that thing is bid, and then it sits there and waits, and for as long as we can't go below that 37 and a half, 37, I mean, I don't see what's going to bring it down, really.
Yeah, now the yields are coming off,
Yeah, as
and yeah.
well. That's
So
another little push. Although gold is the more dynamic one of the two. That's moving around a lot more, and then all of a sudden silver catches up in a move. So yeah, as I said, for as long as those buyers come in too high for my liking in silver, it's still looking quite big.
okay, TLT, looked pretty ugly last week, but not looking
Mm,
as bad. Maybe um, this pullback is 2 or B, and we're going to go again. I
yeah,
mean, there aren't too many bond bulls left.
no,
So yeah,
but your two black lines there seem good enough to keep it inside that range.
yeah. So okay, yeah, and we've had ranges for a long
Uh-huh.
time,
Yeah.
so yeah, we could be range bound there. Okay, so CAD really holding up pretty good. Anyone have levels if CAD pulled back Blake, where you would look for longs in CAD, could it be around 6.5 if we got down here? Would you like it or a little lower?
Yeah, it's channel support, Dale, and I think it's just in a rising, choppy channel higher. So I actually just started buying it just a little while ago. So at
Okay,
these levels, basically, and I've got room to add a little bit too because I'll show you here real quick.
okay. I'm gonna
Um,
let you got him, bro.
all right, let's see here. Um, Yeah, if you look at the dollar CAD, here's channel support, and it's broken its longer term channel, like the
Yeah,
one from when we were way up at these highs, right? So
yeah,
we've already broken that trend line, and we're just basically back testing that trend line. But you can see this very minor channel. The bids coming are they're already filling in ahead of here. This is at 137. So but I'm still looking for really, a longer term dollar, squeeze. And
yeah.
I think we're eventually going to break through 138. I'm trying to figure out what the catalyst is. When I was listening to the Flow show this morning, Ryan, I think you were mentioning like, what's happening with the dollar CAD and what's going to be the next move here. And it's hard to tell. I was watching this CNBC news special over the weekend about how Canada's really boycotting a lot of U.S. products. Like it's gonna have a I think Goldman had estimated 0.3% of U.S. GDP shaved off just in Canada's boycott of U.S. Products, and it's not just a U.S. issue. It's a U.S. Canadian issue, and how's that going to affect Canada's economy moving forward? I find it very fascinating, and it's unfortunate too, because Canada being one of the U.S.'s biggest trading partners, I still have I have a feeling that Canada is going to have a very negative effect from this whole trade situation as well. I don't think there's going to be any winner, not the U.S. nor Canada, but it's the balance of who's gonna fare a little bit better than the other, and that's why I'm like more bearish the Canadian dollar down at these levels versus being bullish. After we've seen the reversal of the last several months. Um, but to be convinced, I really want to see a move above 138 before I'm convinced that we're going to see any real sustainable bullish, or bearish Canadian dollar activity. But
Well, I can make a slight counter argument there, because if Canada's not buying US and they're instead sticking to buying domestically, that should be a boom for the Canadian economy, particularly with travel. Hearing Canadians aren't traveling to the US, places some people have been going for years, year after year after year, and they're staying at
Yeah.
home and looking at home. So that could support the Canadian economy along the road.
Sure. Yeah. I mean, I get what you're saying. But the U.S. has been, it has been a big destination for them. But there's, there are a lot of goods that we produce that we sell to Canada that we're, and then we're tariffing, and Canada's got to source that stuff from different places. I mean, like I said, I don't think it's going to be a win for either side. It's not like, oh, this is going to be much better for Canada and much worse for the US. I think it's going to be bad for both. And that's why I think we're probably more at an equilibrium right now than we've been in a while, especially after seeing such a big drop in the dollar Canadian in recent months. But anyway, what do you think is going to be the next big driver for Canadian dollars, Ryan?
That's the question indeed. It could be oil taking off. If we do get some of these trade deals done, if we do get the tariff effect not as much as expected, then we see a few firms who are sitting on investments, waiting to see if they suddenly go to work. It's going to be a boom for manufacturing, which will be a boom for commodities. On the flip side, if we don't get that, if we keep getting this malaise, and we've got the USMCA to be negotiated, Trump and Lutnick raising that at the weekend, if that's a big old mess, then you're probably going to see the dollar strengthening against both those currencies.
Yeah, we haven't heard a lot from the USMC about the USMCA just yet. I think their focus is, you know,
Yeah, a bit lip service. We had
they've got
over.
300 other countries, even though there isn't 300. There's 300 other countries that we got to deal with first, apparently. So we'll see. Speaking of the dollar mex, yeah, K-Man, you've been on the
Correct side.
bearish side of the dollar mex recently. How do you feel about this USMCA? When are they going to kickstart those negotiations again?
That's an open question. We were talking about it on the Flow Show again this morning. I mean, it was it was planned for next year, but with Trump, we never know. He can, as Ryan says, he can come out today and say we are going to break it all down. And um, I really don't know when they are going to start talking about that again. I would be surprised they let it go until like next year. That would come as a surprise. Even though deadlines are getting pushed back, like Besson said again a couple of minutes ago before the show. Even bearing that in mind, I don't think Trump will want to let USMCA just simmer for another 7, 8 months before getting into it, especially not if the rest of the trade deals may be a little difficult with Europe and even Japan and China. He may just wake up one day wrong
Bad.
side of the bed and go like, well, okay, I'm tearing up USMCA as well because you're all against me. So now let's
Right.
make it really hard. So yeah, I would be surprised if he waits until March next year. But for now, I would say, and then since the start of all this, I've got the impression that he is tougher against Canada than he is against really Mexico. And that is one of the reasons why I guess that the Mex is not doing too badly because it's coming back to the levels. And as I said, yeah, I'm not as impressed with the Mex rebound as potentially the dollar cat being a bit better bit. So yeah, out of the two, the Mex is likely still doing a bit better. And you got 4% or so more in the mix, although carry is a concept, I
It's
mean,
a it's a
one
minor
day,
concept at this point, right?
yeah, well, yeah, and in one day you can completely undo a year of carry. So yeah, so maybe
Right.
it's not the best consideration, but I do think Mexico is looking a tad better than Canada there right now. Just
Well, let's talk a little bit about the yen. I know you guys discussed it a little bit earlier. The one thing about the dollar yen is it pushed out of this triangle last week, and that probably continued the squeeze a little bit, and everybody's positioned for weaker yen going into this weekend. Market got what it wanted, so this is more the Ryan, as you pointed out in our chat room last night. Actually, early yesterday, this is the buy the rumor, sell the news. Now you're seeing the yen strengthen. I think we're getting towards levels that are attractive if you want to be selling yen. As you guys were just talking about the low 147s, I see the same thing. Around this triangle support. You can see the 38% retracement of the entire move comes in at 146.70. So somewhere between 147, 146.75 or so. I think we might find some buyers today. It is down a full percent or 150 pips. So we are probably getting to levels that you might see some sort of reaction. So just keep that in mind for those of you that are out around trading yen. Now gold just broke above a 618 retracement, and that's something that I want everybody just to focus on this level because this is pretty key resistance. We're probing it right now. There's a difference between a break and a probe, right? Right now we're probing. Sustained breaks of these levels would be pretty bullish. So in other words, if we get closer to 3,400 and we can hold it, that's going to be pretty bullish for gold. The flip side is, if we have just like some two-way price action around here and fail, that's going to be a negative for gold. I still am very unimpressed with the gold move overall, but this is the one chart that on the week ahead video that I talked about that, if gold, and most of you already know this already, if gold ever breaks this lower trend line, I'm buying the dollar. I don't care. I'm pretty much going to drop everything that I'm doing and just say that trend line breaks. That means we've had multiple failures at these highs, and I'm talking this week predominantly, that I'm going to be buying dollars. Like I said, I don't even care what I'm doing at that moment. I'm just going to turn around and start buying it. I think correlations actually will come back into sync should that happen. Now, I'm not 100% sure that's going to happen. That's just something that, I'm waiting for. And that's what we do in the markets a lot is we just sit around and wait. So since I kind of given you guys my playbook for the week, just in that alone. Let me ask you this, Ryan. You were talking about U.S. exceptionalism on the Flow Show earlier today. Thursday, we're going to have the PMIs. We're going to have the Eurozone PMIs, UK PMIs, US PMIs. Is that where the US might show and start to grit its teeth a little bit? Is that it on Thursday, or what are you looking to trade this week?
Yeah, well, the PMIs, we've seen a decent improvement over the last couple of months in services and manufacturing, which has been a bit of surprise because everyone's thinking that firms are sitting on hold. So if that continues, then it's yet more data that suggests the US isn't rolling over, and it's going to, question the dollar selling rhetoric that we've seen over the last few months even further. So yeah, I'm less of a dollar bear than I have been. I'm still long dollar CAD. I'll be happy to pick up some dollar yen perhaps at 147, though I'll be very, very cautious that we're coming back down here so quickly after last week. But yeah, I think there's some key levels around it, but you got to pick your pairs. Euro dollar down at 115, that'll look juicy to keep the trend going. But yeah, I think my fear is whether we're going to hit a bit of malaise going into the summer after all the central bank meetings next week as well. And then we're probably going to see a lot of consolidation going on.
All right, so you're thinking euro could reach for 115 into the 115s again. Now we were just at 115.60 something last week. We held. Do you think we're going to get much below that?
We could do if it's hot US data and the expected pickup in Europe doesn't materialise in the PMIs. Then yeah, we could see the dollar getting a bit more on.
All right, so your focus is going to be on the euro this week. How about you, K-Man? What are you thinking for the week? I mean,
Yep.
we do have the ECB this week.
Should be, in theory, should be a non-event. But Thursday is clearly the day where things should be on the move. You got the PMIs, and then you add the ECB to it. I have an extra one that I'm going to watch, especially that we've seen that cable hold so well around 120, 133, give and take 3/4, right? Friday morning, and that's again towards the end of the week, we will have the UK retail sales, and we saw a bit of up and down, but mainly not too brilliant UK data out, and that may be maybe one to keep an eye on as well as a kicker for the end of the week. But yeah, I can just repeat what I said earlier. I think we're still in that corrective phase or a phase of consolidation in most of the dollar pairs, and unless we get trade news or some really nasty geopolitical news or so, I think we are going to trade ranges until Thursday, possibly.
Yeah. All right. Well, the data in the US is going to be kind of lacking, but you know what? We've got some earnings this week, Dale. We have like Tesla on Wednesday. That's going to be aftermarket close. We got Google, we have IBM, Chipotle, Texas Instruments on Tuesday. We have let's see, on Thursday we have Intel, Blackstone, Honeywell, so there's some big earnings this week. What are you thinking about this week, Dale, and how are you going to navigate through it all?
No idea right now, but I can say that if you put SPX up there on the 4 hour, The move to new highs did not blow out the divergence, so I'm still watching that. I thought it would, but it hasn't. So I think there's some stuff up around the 60, uh, 63.80, 63.60. But I'm thinking the major high, a more important high happens in August, that we get a short-term low, then a new high to the targets that you were talking about over a month ago in the 64.50 level or so, Blake. So, it's just a trading affair. I think it's going to be more two-sided into those targets, but you could sell rips and buy dips. So just trade it. I don't think you position for anything huge on one side or the other till we get through the summer.
All right. Well, hopefully this, first of all, let's just understand that it's the end of July and we've had a really volatile summer already. The spikes that we see have been
Yeah.
pretty crazy. Now, if you trade equities, you're probably like, I'm not seeing it. It's just grinding higher. If you're trading currencies, that's where the volatility is at. And that was the point I was making during the week ahead video is volatility is in the currency market. We're seeing a shit ton of volatility. So, we are called Forex Analytix. We obviously look at a lot of other instruments. I mean, if you look at the 30 instruments that we cover, from crude to boons to the 10-year to Bitcoin, we're talking about Leandra just took advantage of a 40% rally in Ethereum the last 2 weeks for our patterns in play. So you guys want to know that we're navigating through not just currencies, through everything. So anyway, if you guys want to be part of what we do, we have initiated the summer sale. We've brought back basically the 40% off month over month subscription. And when you're in, you are grandfathered in. We don't ever raise your prices as long as you stay a subscriber. And we have people that have been paying since, for the last 8 years, since day one at much, better prices. And we just keep them that way for you. So if you want to lock in 40% off, well, we're bringing back basically what was the liberation offer before. We got a lot of complaints. People were like, "Hey, why don't you give us that offer?" Again, so we put it up and for you guys. So take advantage of that right now. It went up this weekend. And with that being said, Dale, I know you're bringing in Don Dawson, which he doesn't have a social media presence, but a really good analyst nonetheless. So thank you for bringing him in. And I want to thank Ryan and
Yeah,
K-Man.
Don's great.
Yeah, for getting us squared away after the Japanese upper house elections this week. It's been awesome, and thank you guys for keeping our heads on straight for that. And Dale, have a great interview.
All right, I just want to say to the crowd, surf's up. How about your P&L? And with that, I'm going to bring in Don Dawson. Don's a great technician. Most of his work is based on seasonals. I've seen him come on the show and talk about things and then see him manifest more than once. Welcome back to Face, Don. How you
Hey,
doing?
Dale. Good, doing good, Dale. Thanks for having me back.
So great to have you. Are you still on the corn, the seasonal bottom? Looks like that you talked about that I saw on LinkedIn. You still on that trade?
It's not on a long. That corn, I believe corn still has just a little bit more to go lower.
Okay.
I guess it could get like this past week, we had a little bit of talk about the pollination was having a little bit of issues. So there was what we call the old dead cat bounce. But, that trend is obviously down, and trying to pick a bottom in that market right now is kind of dangerous because everything is doing good for corn. This past week,
Okay.
I was driving down through Central Virginia and going through a lot of farmland. And I mean, it was just corn was out to the side of the road.
Wow.
Not out in just a field. It was coming up to the side of the road. So there's corn everywhere. So
Okay.
I don't see corn having any kind of a lively rally. I mean, everything's been really good for corn this year for growth.
Okay. Beans came off. They had a little three drive to a bottom last week and rallied pretty sharply.
Yeah,
Any
if you Yeah,
ahead.
the bean market seems to be a little bit more congested than what the corn market. The corn market's got a really nice daily trend. You know, it keeps that 50 SMA, keeps a beautiful downtrend going with it. But the soybean market's been very difficult to get a sort of a longer term trend in. Good
Okay.
swing trading. I mean, a good range bound market, but I don't see a real trend in that market right
All
now.
right. Well, Don, if you share your screen, I'll stop guessing with what you're with the, what's on the docket for you. Could it be gold?
That sounds good. You hit it. There we go.
All
Talk a little
right.
bit
Well,
about this.
it took two mulligans, but I got it off the tee. All right,
There
go
we
ahead.
go. So yeah, this is an article I just written. Matter of fact, if I just take you back here to bar charts
Yeah.
homepage
So
here.
that's where you find Don, and that's a social media presence. A
Yeah,
lot of
I
people
actually,
use bar chart. Go
yeah,
ahead.
I have a Twitter or X account that tells you how much I do with social media. I still call it Twitter, but
Okay.
it's at Majestic Futures is the
Okay.
that I
Do you
use.
use it much? Do you post there much?
Mostly just posting my articles on there, and then just following some of the other like grain companies and stuff like that to get a feel for what they're looking at. I like reading what commercials do. That seems
Yeah.
to me drives the markets quite a bit. So I like kind of knowing what they're doing. So that's what I like to
Okay.
follow on social
So
media.
in the gold, commercials have net short positions here.
Yeah, no, actually, commercial they usually do. So mostly like your central banks basically would be considered commercials. Then you got
Oh
your
yeah.
miners and stuff like that. People who produce the gold. That's who would basically looking to do most of the selling in here. And then you got the jewelers and stuff coming in. But most of the time, you see commercials on the short side, which tells you it's most of the producers who are doing the hedging. And the same thing with the swap dealers. You see them mostly on the short side as well.
Okay.
But anyway, on this, if somebody wants to follow me on some of my articles here on Bar Chart, they're free to get to, but it's barchart.com. And then when you get to this page, it's just underneath where it says news up here at the top bar. You can click on that. And then over here on the left where it's featured authors, my name's somewhere right down in here. I'll get to number one day. And there we go. And so that's got a list of all my articles that are archived on here, going way about 2.5, 2 years back of articles that I write, and usually write one per week. But this is the one I'm going to be looking at right here, and that is on the gold market.
Okay.
And I found this one, I wrote about it because this is one of the I'm a seasonality type of a trader. I like to look at seasonal patterns. It doesn't
Right.
mean that I just, if there's a seasonal buy or a seasonal sell, it doesn't mean I just buy based on that. But I like to use them for kind of a screener, for a commodity screener. And it kind of gives me an idea that, okay, this market's primed to go up or down, but let's see if we can find some supporting technical facts, for example. If the fundamentals support it, that's even better. But mostly I like to make sure there's an uptrend or a downtrend based on whatever the seasonal pattern is, because I am a trend follower. But with the
Okay.
gold market, they have a very, very good traditional July rally basically into August. And it's such a solid time of the year for long positions in gold. Now, as we all know, gold's had a pretty good run up over the last year or so. And that's what basically beginning of the article is talking about, how once we took out $2,000 per ounce, it
Yeah.
just went straight on up here to 3509 basically, right?
Yeah.
Well, it's been kind of interesting. I mean, here's a week chart, and it's got the 50 SMA on there as well. And again, I'm a trend follower, so I give the benefit of the doubt to the trend. Like I never try and pick tops and bottoms, but again, that's just my style of trading. But what I've noticed on this one though is when you go back even further in time on this weekly chart, the 50 SMA, for example, prices get a certain distance away from their mean, which is an average
Okay.
price, and then it tends to want to gravitate back. But if we look at this recent rally since we took 2000 out, look how far
Yeah.
it stays away from that 50. It just says, man, this market wants to come back and test his mean at some point.
Where is that coming in? Around 29?
It looks like it is, yeah. Somewhere's up in there.
Okay. Yeah,
Yeah.
there's some
And
targets around there. So perhaps in towards the end of this month, we only have a week or so left. That August could be that time frame where it tries
towards
to
the end of
revert.
towards the end of August might not be a bad idea either. So, but
Yeah.
anyway, I just wanted to kind of pull this one out. I mean, it's definitely since that 2000 breakout here, and it's just been going like a freight train this way. And now it's interesting because it's been going sideways here, and that's not unusual because I think the last time we were on your show or time before we were talking about gold, and we were talking about how it usually peaks out there in March, and that's what let me just pull this seasonal pattern back up here really quick. Here we go. So this blue line right here represents a 15 15-year seasonal pattern, and this is from a company called More Research. That's where I get
I
my
know
seasonal
it.
analysis from.
Yeah.
But basically, you get this beautiful rally. This is another really good traditional time of buying the metals, especially gold, is that January through March timeframe. And it did the same thing last year. I remember being on your show and we talked about it there. But the market goes into a correction after March. Now, remember, corrections can be down or sideways. And if you
Right.
look at it, that's pretty much what we've been doing, just went sideways since March. Now, here's where we get that typical, that it starts basing here in July, but you see this August rally right here. This is a pretty good rally we had. It's pretty consistent too, and it's 15-year average right there. And so this is what I was writing about this month or this week and wanted to talk about because it's such a good run. Now, it's a little tired maybe from this big run here, but traditionally we still get another peak here. So to me, I don't like to predict anything, but we are still in an uptrend. So this old high, I think that's still in play here, to tell you the truth. But we'll have to see. I don't like to predict or anything. I mean, if the trend, the daily trend for me right now is just sideways, and I'm waiting for it to start making some highs here so we can get on board. But I really do like this pattern that's coming in here. So the other thing I've noticed too is, and I just left
So
the
you
R
still
side.
like the long side for a
I
while?
do for this period, the short period right here. And then we rally up into this, like, because remember, September 30th, which is where this ends here, is the end of the US government's fiscal year. So basically, what ends up happening during that time, the 10-year treasury yield, for example, it does
Go
what
up.
price does this, but the yield goes down during this same period here, year after year, as we come into that September 30th. And the reason for that is the government just isn't issuing quite as many notes and bonds coming into the end of their fiscal year. So this is just another pattern that happens every year. So remember, when rates go down, that's bullish for gold. That's how part of this pattern, I believe, developed over the years. So
Okay.
that's why I kind of like this
So
pattern.
I'm a little confused. We think there could be a mean reversion, but
I
you're
do.
still bullish now, and we can make new highs before that mean
Yeah, I'm
reversion.
bullish for this let's call it relatively short duration here. I like this end of July period right here, but coming right on up into that August period. This is just such a bullish time that I have a feeling, especially with the other metals already hopping on board for a big bull
Yeah.
run.
Yeah.
I think the gold does have its shot at possibly coming up here making this new high. After
All right.
that, I have a feeling that's where we're probably going to start seeing that mean reversion.
You think
That
it,
is,
do you track the dollar, Don? Do you think it could have anything to do with a lot of this move in gold, although it's rallied against all fiats, including the Swiss?
yep.
Do you think that there's a possibility of a dollar bottom? Do you have anything seasonal in currencies?
Yeah, it's interesting because on the dollar right now, it's still, in my opinion, we've still got that on a daily downtrend. If you put a 50 SMA on that, for example, you'll see we're coming up and kissing that downtrending 50 right now. So
Okay.
that could actually tie in with this little run up right here. If we
All
get a
right.
little higher,
One more
a little
down in
bit
the
more down on
dollar.
dollar.
Yeah. Okay.
And then we get this little spurt up in here. So the timing of it is kind of ironic how that's working out. But
It's a
anyway,
coinkydink.
there you go.
What a coinkydink, huh?
Exactly.
All
But the other
right.
thing that was kind of interesting here is, and I don't use RSI relative strength index, on an everyday basis or anything, but I do like to look at it on these bigger pictures like this. And when I did this graph that was already on MRCI, here's the 50 period or 50% range down here. And normally in these bull markets, it's ironic how the RSI returns back to around that 50% of an RSI, and you get a bounce, right? And look where
Right.
we bounced. We get right back down to here. And this is where we're at with
Right.
this little sideways congestion. So here we are at halfway back on that RSI that in the past has given us 3 bounces already. So it's interesting how the seasonal is lining up with this in the big picture. So now the thing that's got me a little concerned here, and that's why I think this is going to be really short-lived on this rally up here. And this also kind of goes into the idea right here of in the last 15 years, you can see that 1, 2, 3, 4 of those years, based off this seasonal pattern we're talking about, never had a daily closing drawdown. All right. And it averages about 47 points over this last 15 years on the profitable trades. Now, again, this is all based off hypothetical trades. So there's no guarantees. But boy, when you see this pattern year over year, you start looking, okay, how can I get into this thing? But up
Well,
here,
everybody who remembers me interviewing Alexander Perna,
yeah.
Alexander wants Don to leave his seasonal work to him in his will. So, people love Don's seasonal work. That's why you need to follow him. Goes back to, Jake Bernstein days, right, buddy?
Oh man, you're not kidding,
Or
Jake. Yeah,
Walter
yeah,
Bressert.
man. Oh, you are going back in time. Yes.
Huh? How
Yeah.
about Jesse Livermore? I had lunch with him once.
Yeah. That's a good book. But yep.
All right, go ahead, bro.
So what I wanted to look at here was who's in control of this market. And again, this is what I like to do with my seasonal analysis. It starts with it's on a watch list now, right? Because of this seasonal pattern. So now I'm looking for some fundamentals and some technical support this bullish pattern. So right now it's looking pretty good technically, but this little picture here is a little ominous. And I think this is what's going to help that push back towards the mean here after we get this next run up here in July. But this is the commitment of traders report that I like to look at here. And this is the managed money picture right here. And basically, it's what they call the disaggregated commitment of traders report. And it comes out once a week, and it comes out on Friday, but it goes from Tuesday to Tuesday's reporting. But what I wanted to show you here is managed money are typically trend followers because they have so much money, they got to put it into the market and they can't get in and out because they have such a big size. So they're not very nimble for getting out of their position. They have to scale in and scale out. So what I wanted to show you here was an interesting picture. This is the move back here in November 2022, and this yellow line is the price. And this is available on the CME's website, too, guys. If you want to go in there and look at it for free, it's a good way to follow the markets, basically.
Yeah.
But here is the yellow is the price. Now notice here, and the blue bars coming up is managed money adding new longs. Now remember, this isn't net, this is gross positions, okay? The red represents their short positions and the green is their spreading positions, which is not anything that we're concerned with today. But look what's happening here. When the market rallied and we got this peak put in here, we put in, here's the high watermark, if you will, of long positions by managed money. And then when the price breaks this previous high back over here, new managed money came in.
Yeah.
Then when we broke this high back over here, new managed money came in at that peak. I think it was around 2,500. I put that number on here somewhere, but it was around 2,500.
That was last fall, right?
Yes. Okay. And then look, when the price makes the new high over here,
they're not adding.
It wasn't new money coming in. Look at this, another new high. It's not the big money, not the strong hands, unfortunately. Now, I went and I looked again at the commercials. I looked at the swap dealers. I said, who's buying? Who's buying? Unfortunately, here's who's been buying.
The little guy?
The non-reportables. Now, I do want to clarify because a lot of people think non-reportables are like just retail traders, but they're not necessarily. These could be bigger traders, just don't, maybe they're diversified across their portfolio and they only have a certain amount of money allocated towards the gold market, for example. So it could be bigger traders, but they're just not trading over the reportable size, okay? But the point I just want to point out, this is not just retail traders, which is what I think that's a fallacy people have when they see non-reportables.
Well, they used to call it small specs, large specs, commercials.
Exactly.
Now they have different labels, right?
They do, because of this aggregated report is broken down in different categories. So that's why I just want people to know, it doesn't mean just retail, but it's still relatively small positions. But here, if you'll notice, during that same rally, these guys just keep adding. And now that we've been coming up in here, see, they're still buying at new highs, at this new highs up here. So in my opinion, it's not going to take much. If this thing starts to wobble and roll over, these guys will probably be the first to run. And that's probably what's going to start the catalyst to the downside. So this could be what's going to be that beginning of the mean reversion after the seasonal pattern here. Because I still think we got at least a little pop up to our new high here. And then who's waiting for us up there?
I dare you to tweet that. You'll get a lot of hate responses if you say anything negative about gold.
Oh, so yeah.
That'll tell you something about what sentiment is if you even talk about a correction.
Yeah, exactly.
But I had one guy say, because I'm looking for one, Dale, why don't you delete that tweet? So instead of that, I blocked him. So,
well, anyway. I mean, if you're a professional in this business, you do know that corrections are healthy for a market. That when you don't get a correction, when it goes up, when it does finally correct, they're not pretty, right? So I'd rather have a more normal market where it does have typical corrections. For
Yeah.
one, it gives you an opportunity if you want to add to a position, or
Right.
it just kind of makes that market healthy. Keeps it
Yeah.
out of the doctor's office. Is that apple a day or whatever?
Yeah.
Anyway, but that's what I'm seeing on the gold market right now, and it's pretty much just kind of broke it all down into this particular article right here. And this is that seasonal pattern. I just love it. This one, that January up through that March, and then this July. These are my 2 times of the year I really get interested in gold. My
Okay.
rest of the time, as far as a swing trading position, I get interested in it. But
Don, what really some very interesting tells, especially that the big guys are not adding like they did at new highs, and the little guys are continuing to pile in.
Right, and no one else is, right?
Those big guys are central banks, right? So I mean, no one's reported. They're part of the big guys. No one's reported that central banks have stopped buying. So that's interesting that you could see that, because wouldn't that show up in the data?
You would see that they would come under either swap dealers or commercial activity, because they'd be hedging basically in there. But this managed money, or your hedge funds, commodity trading advisors, institutions, even at that point, right? So when they're managing money, like the Goldmans, Merrills, and all that stuff. So that's who your managed money is, coming in from those sides.
Okay, I have one question. If you want to take it before we wrap, Will wants to know if you have any view on wheat. Something biblical. Something biblical. Are we going to need Joseph to store some wheat for down the road?
Some wheat?
Yeah. It's okay if you have no opinion.
Yeah, I don't really, and we're talking about the wheat market, right? The grain market.
Yes.
The wheat market is just, I found it's the most difficult grain for me to have a technical opinion on. I can follow soybeans, I can follow corn, but the problem with wheat is it's produced in so many places in the world, unlike corn and soybeans. Basically, North America, South America for soybeans, and North America is the largest producer of corn, right? It's very easy to keep up with that. But when wheat is produced in so many places around the world,
Argentina,
Russia, France, everywhere. So it just gets a very difficult market to wrap your head around. Even on the COT reports and stuff like that, it's very difficult. It's been in a downtrend. I mean, it's been a weak market. Wheat has been weak. So it's just, it doesn't seem to get much traction anywhere at this time anyway.
Okay, appreciate that, Don. Yeah, not the weed market. Yeah, they would ask me that question. So, okay, so Don, best way for people to follow your excellent, I think, elite work from a veteran. Go to Bar Chart as really the best place to see all your stuff. You also post on LinkedIn a lot, right?
Yeah,
that's one.
On LinkedIn, but I would say the Twitter or X account is where I put all these articles in there too. So if it's easier for somebody to follow me on Twitter or X, I get it right one day.
Okay. Well, will you do me a favor and follow me at Forex Stop Hunter so I have you?
You do.
I don't know if you do it.
Yeah, we follow each other. Yeah.
Okay, because then I could announce you next time you're here. We could announce your handle because since we've been together, I've just been listing your name. So give me your handle and you'll get more followers that way when you're on. Okay.
Oh, cool. Okay.
And we can communicate there and have a bromance and tell the world how great we each are. Okay.
There we go.
Don, always a pleasure talking to you, and always a pearl or two that you bring to the table. So thank you, my trading warrior brother.
All right. Thank you very much, Dale. Enjoyed being here, and good luck with everybody's trading out there, and be safe.
All right. Don Dawson, everybody. Keep an eye on the gold, and that's going to be a wrap for me. Remember, don't just count your coins and bars and your your grains, whatever it is, count your blessings. See everyone for Turnaround Tuesday. Thank you, Mandy. And we'll see everyone later. All right. You could join the team in about 18 minutes, 19 minutes on the morning edge. So, you need to get the edge And Don Dawson brought you an edge in gold today. That's why we do it. Follow the man. Adios, everyone. Thanks again, Don.